Good morning to Lottie Dottie, everybody. This is Tim Davis coming to you guys from the Bullish Bears team. All right, it's the weekend. It's Sunday. Going over some chart analysis and some potential good plays for 2017. And I've been analyzing several different sectors, and one of them really stood out to me. And I'm going to tell you why. And I'm going to tell you my option play that I plan on doing for this particular an individual stock within this sector. And as you guys know, normally throughout the trading year, a lot of traders, a lot of companies, they have their money flowing in and out of sectors, depending on which sectors are outperforming others. And I don't know if you guys noticed, but over the past several years, one of the sectors have been lagging behind everybody else. Okay, I say that to say this: normally you have those laggards, and you have a market that's consistently rising. Sometimes a laggard will find a way to take one of those years and start to outperform the others. And that laggard right now, you guys, is the healthcare sector, specifically the biotech sector. On my screen right now, I have a chart of the IBB, which is an ETF that tracks the biotech sector within the NASDAQ. All right. And what I have here is a daily chart. I'm gonna break this daily chart down, but I want to show you guys. I want to go back in history. This is a daily chart over the past year. I want to even go back a little bit further, show you guys a weekly chart. Let's go back over the past, let's say 3 years for the IBB. See what it shows. And as you can see, over the past 3 years, IBB has took quite a beating. From 2015, it was trading around $400 a share. Then it started to, take a beating. It went into this downtrending channel. And as you can see, it remained in that channel for several years. Came up, hit its peak around here, 400. Started this little downtrending channel. And it looks like it wants to change to break out to the upside. So as you can see, it started a little sideways pattern for quite some time here. Let me do it this way. Started a little sideways pattern after it tried to come out of this channel, started trending higher, but it just pretty much stayed in its box until this last green candlestick. And I'm gonna show you guys where I see a change happening. I told you guys, if you watched my previous video about Bollinger Bands and moving averages lines, you can see change when change is about to appear on this long-term chart. You had price starting to, it was downtrending for a while, and that was from around July, June of 2015, all the way until April, about March of 2016. Then it started doing this sideways pattern. It's in this little channel here within the Bollinger Bands. It was stuck in this Bollinger. It was stuck within this channel within the Bollinger Band after it trended down from 400 all the way down to about 239. Then it started trading up and down, all last year. Okay, if I was a betting man, I would say that it's about time for the biotech sector, the healthcare sector, to get a boost. It's time for them to come out of this range. And there's so many indicators, you guys, that are pointing to the biotech sector getting a boost this year. If you pay attention to what's going on in our economy, with the healthcare sector, what's going on with readjusting Obamacare. Nobody really knows how that's going to pan out. A lot of people starting to really trying to beef up on the healthcare sector. So there's a lot of things that's going positive for the sector. And as you can see, a lot of the technicals are starting to show the same thing. Look at the RSI. RSI is starting to trend upward instead of this little pattern that it's been stuck in for a while. It's starting to trend upward, and to come upward towards the 70 line, just reach the 50 line. That's a very, very good sign for this biotech sector. Also, look at this this candlestick pattern that's starting to form. It's starting to trend upward, and it's starting to breach above these previous resistance levels. And it's starting to breach them. It's starting to breach them. If you look at the Bollinger Band, you can see this little dip here, and then it's starting to turn up. This one here, like it's starting to either go down or continue to go forward. It may be kind of go forward and go up. And as I told you before in my previous video, the 20-day moving average line, it just breached the center portion of the dotted Bollinger Band line, and it's crossed over and it's heading higher. And if you notice, the 50-day, the 20-day, and the 100-day all are joining here together in an upward motion. And the 200-day is still on the bottom, and it looks like it wants to turn up as well. So with that said, I really believe that this biotech sector is going to continue to rise and go higher. Look down here, your MACD. It had a big dip here, and it's starting to rise as well. And your ruin indicator starting to have a crossover. The green crossover to red, which is another strong bullish signal, signaling that this market is ready to go higher. So you got all these divergences showing the same pattern, showing it's going upward. You had a nice pinch play back sometime last year. Nice pinch play. You got this tight pinch play right here. That means this market dropped so much that you had a PMO and ADX line starting to come together. Then they start to pull apart, go the opposite way. That's a nice bullish pattern. IBB, trust me, you guys. When I see something that you have so many signs of pointing to this going higher, I'm going to look advantage of taking advantage of this market. While a lot of the other markets are probably extremely overbought right now. So some of them will continue to rise. Financial sector, I think that's going to continue to rise. But I'm really going to focus my energy this year probably a lot on this biotech sector. With that in mind, I'm going to look at one particular stock in general, and I'm going to tell you why I love it so much and my option play on this particular stock. And that will be, if I can get to it real quick, drum roll, please. We're going to start with the weekly chart. CARA Therapeutics is a stock that is a biotech sector. It has a lot going for itself right now, and it also has some exposure to the medical marijuana field, which is really starting to show some steam over the over these past election and these election things that came out over the past couple months or so. So if you look at CARA, this is a weekly chart. And I'm going to bring this in a little bit tight. I'm just looking at the past. Well, let's keep the past 3 years up. And if you look at this weekly chart, you'll see where CARA pretty much followed the overall picture of the biotech sector. Nice little drop in 2016, consolidated here some around us. And then it's starting to take off. And it's coming back up to some resistance areas. Okay. I strongly believe that CARA is ready to break through these areas of resistance and go higher. You have, when it was bearish, you had all moving average lines heading down this way, had a crossover point here, and you got the red one, which is the shorter one, 20-day on top. All the others are starting to fall into place. That's a perfect scenario for the stock to gain momentum. I'm looking at this thing to really gain momentum. I can see this thing breaking this $20 barrier pretty soon. And I really believe it has a chance to actually break, at least meet up to its highest point before in the past, which is around this $23 level. I can see CARA going up to this $23 level before this year is over with, probably sooner than that. And I'm going to show you some other, and when I see stocks like this, I also do a lot of other research to find out what other analysts are saying and what are their projections on a particular stock. So this is the weekly chart. Looks very bullish. Let's break it down a little bit further and see what's going on on the daily chart and the hourly chart as well. Here's your hourly chart over the past year, and as you can see, they had the crossover, right? All four moving averages lines crossed over right here back in November of last year, and they're starting to spread apart. And it had a nice little dip here when it crossed over here. It had a nice little pullback, proceeded higher, Made it up to this 1720 point, which probably was another resistance area. To the little pullback. Pulling back to the moving averages lines, to me, is a perfect time to look out for an entry point. And it bounced off of this 20-day and starting to go higher. Already surpassed on where it pulled back from, and it's marching higher. The moving averages lines are all in sync now. The 20, the 50, the 100, the 200, all in sync. You have your Bollinger Bands. It's starting to spread out again. It's going higher. You have a nice little dip in your MACD here. The red line crossed back over the black. Black is heading higher. That's another bullish signal. Another bullish signal in your rune indicator. Went down so far and bounced back up to go higher. And a nice little dip down here in the ADX line. Green's on top. It's ready to go higher. This stock is ready to go higher. Nice little movement up here. Nice little pattern. It has not spent any time in the oversold area since last year. I don't think it will do so anytime soon. Might be a good buying opportunity. Okay, so this stock looks strong. Look at the hourly chart. Yeah, let's look at the hourly chart over the past month and 20 days. See where we're sitting at. See if I can find an entry point here. And it bounced off of the 20-day here. And it's back around where it was at before. I think we're going to break this. So I think it's a good time to entry. I think it'll be a good entry point. I think this is going to this is room to probably go down, but so far and probably pop back up. Even if it didn't, I would look to the option play I'm looking at getting into. I'm going to allow myself a lot of time because a lot of these biotechs can be very volatile, as you can see. When they do have pullbacks, they can pull back as far as the 200-day moving average line before it starts to recuperate and go higher. So I would give myself at least about a good 7-8 months within the stock in order for me to see a nice profit or get a nice gain out of it. All right. So with that said, let's take a look at what some of the players are saying. Let me see. I always do my research. I go online and I Google CARA just to see what some of the players are saying. This one says CARA Therapeutics stock rating reaffirmed by Raymond James Financial Incorporated. CARA Therapeutics Incorporated's stock had its market perform rating reiterated by stock analysts at Raymond James Financial Incorporated. In a research report issued on Sunday, and this was today, March 5th, they have their price target set at $30. They have a $30 price target. I think it has the possibility to reach that by the end of this year. Separately, Scotiabank restated an outperform rating and set their price target at $32 a share. So there's a lot of bullishness on this particular stock. If you look at this is Yahoo Finance. Yahoo Finance just show you some of the stats on CARA, and Yahoo Finance shows you a lot of information, you guys. I would highly recommend using it to do some analytical background checks on some of your stocks. I want to look at, again, as you can see how it's, this is daily chart over the past year. How it's been doing, having a steady climb higher, which is what you want to see in a stock that you think has some potential to continue its climb. And also in Yahoo Finance, you can look at the actual profile of the company, gives you a little bit more information. There's several other biotechs, you guys, and I would just really decipher that sector and see which ones have potential. Because I think biotechs and healthcare sector may have a chance to recuperate some of its losses over the years. So there's a lot of information in here about CARA. Why shares of CARA were up over 75% since the start of 2017. How high can CARA Therapeutics go? So there's a lot of information. This thing's running a little slow, so I'm not going to spend a lot of time on Yahoo Finance, but this is where you can do a lot of your research. Now, let's get that out the way. I'm done with you. So as you can see, there's a lot of bullish tendencies about CARA right now. So with that said, my play is, and plus, you guys, whenever you're looking at options, you want to make sure that a stock has liquidity. If I was looking at this option chain and I see look the volume section, I see zeros. Open interest may have something here, but if I see zeros here, it's not very, and open interest is low. It's not very liquid. There's not a lot of trading going on within the option itself. The stock price can move, but if there's no liquidity within the option chain itself, okay, you'll probably be spinning your wheels and you'll probably be wasting your time and losing money because there's no liquidity. But this one has liquidity. I'm looking at an August contract, and I like what I like most here in August contract. I think it'll hit 20 because as I told you before, analysts are thinking this could hit 30. I think this may hit 30 by the end of the year. So I would even take a chance at taking this 1750 strike contract and probably hold on to it for a while. Has nice volume, has nice open interest. Now, because these some of these stocks have, now the only thing I don't like, I like keeping my bid and ask price within a certain price distance. In other words, I don't like them being so far apart. Normally they're so far apart that lets you know this thing can be very, very volatile. So I would actually have to play around throughout the week and try to get the price that I want. I wouldn't feel comfortable paying $4.90 for this. I think that's too expensive. $4.32 I probably would settle with, because I look at it like this: if I give myself at least 6, 7, 8 months, I should be able to recover if there is a pullback, a drastic pullback that sucks some of this option away. All right. Keep in mind that the longer you allow yourself in an option, the less the theta or the time decay will affect your option. If I was to try to go into an option for CARA that expires, let's say in March, I'm already behind the curve as far as time decay. When you have less than 30 days in an option, that theta, that time decay will eat your option alive, especially if you try to get into an option like this that has almost $1 spread from the bid and the ask. You won't win. So you need to give yourself time in something like this if you decide to get into it. So that 1750 looks good to me. Even the 20 strike looks good to me, but I would really feel comfortable paying $4 for it. So that's my call on CARA for right now. I think it's very bullish. If I didn't have the money to buy the shares, I would definitely consider buying an option and trying to get a good option price, trying to get in at a good price. If I get in at a price where there's a huge bid ask spread distance, I would definitely consider going long term, at least about 6, 7, 8 months. All right. Okay, you guys. Hope that gave you guys some insight as how I feel about CARA, and not only CARA, but how I feel about the biotech sector. Hopefully, you found some information in this video that can be used for your advantage. Till next time, I'll see you guys on the next video. Have a pleasant day.